Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within corporate filings. And today we're diving into a report that reads like a company is trying to buy itself sometime. Alright, so what we have here is a current report from FlexShopper Incorporated filed on the 30th of September 2025. Now, normally an 8K filing tells us about big, exciting, or sometimes worrying events, and in this case it's definitely a bit of both, leaning towards the worrying side, especially if you're a shareholder. The main story here is an agreement or an amendment to a credit agreement. Think of it like a loan with specific rules. FlexShopper's subsidiary Flex Revolution owes money to a lender called BasePoint. Now, Flex Revolution has been having trouble following those rules. We're talking about missing deadlines to give financial reports, not having enough collateral to back the loan, and not meeting certain minimum cash requirements. Ouch. The lender, BasePoint, could have basically stepped in and said, "Time's up, pay us back now," because of these rule-breaking moments which are called events of default. But instead of doing that, they've agreed to a temporary pause, a forbearance. This forbearance is like a grace period. BasePoint is agreeing not to take action against Flex Revolution or FlexShopper for these past failures, but this is not a get out of jail. Free card. This grace period has a ticking clock. It ends on the 27th of October 2025, or sooner if Flex Revolution messes up again by not following the new rules in this amendment, or if BasePoint in its sole judgment decides to end it early. On top of that, the lender is extending the time Flex Revolution can actually borrow more money, also until the 27th of October. This means BasePoint is still willing to fund Flex Revolution's operations for a little while longer. Here is where it gets interesting. Flex Revolution can actually borrow an extra $750,000, money that goes beyond their normal borrowing limit. These are called over advances. Now, this extra cash isn't just free money. It comes with interest, it has to be paid back by the loan's due date, and more importantly, it has to be used for very specific things outlined in a detailed plan. BasePoint is essentially funding Flex Revolution day-to-day operations through these over advances and access to other funds to help them get through to the 27th of October. Why are they doing this? It's all to support something called an Article 9 sale, scheduled for the 24th of October. This is a sale of collateral, meaning assets that were pledged to secure the loan, conducted under a specific part of the Uniform Commercial Code. It sounds like a fire sale, a way to get rid of assets to pay off debt. So, what happens after this asset sale? The plan is that whatever is left of the debt will either be taken over by the company that buys these assets, or it will just be wiped clean. And the big kicker here, once this sale is done, Flex Revolution, the subsidiary that has been struggling, will completely shut down its operations. So this forbearance and the extra money are really just bridge financing to get them to this asset sale and shutdown. Now, looking at FlexShopper Incorporated itself, they have common stock trading under the symbol FPA on the Nasdaq Stock Market LLC. This report doesn't give us a direct look at FlexShopper's own financials, but it tells us about a major operational and financial challenge for its subsidiary, which will undoubtedly impact the parent company. This amendment is essentially a lifeline, but it is a very short one, designed to navigate the company through a difficult but planned exit for its subsidiary. The critical dates are the 30th of September when this was signed, the 24th of October for the asset sale, and the 27th of October as the absolute deadline for this forbearance and potential draws. So, what does this all mean for FlexShopper Incorporated? This filing paints a picture of a company facing significant financial distress within one of its key subsidiaries. The forbearance agreement and the over advances are not signs of growth or a healthy business, but rather measures to manage an inevitable wind down. The planned Article 9 sale indicates a move towards liquidation of assets to satisfy debt obligations. This signals a potential strategic pivot or a significant restructuring for FlexShopper as a whole. The weakness here is the clear financial trouble of Flex Revolution, which will likely strain FlexShopper's resources and reputation. The opportunity might lie in how effectively FlexShopper manages this transition, potentially shedding a failing operation to focus on more profitable areas if any exist. However, the risk is significant. There is the risk that this planned sale doesn't go as smoothly as intended, or that further unforeseen liabilities emerge. The fact that a subsidiary is ceasing operations is a major red flag for the parent company's overall health and future prospects. In conclusion, FlexShopper Incorporated appears to be in a precarious position, using this amendment to manage the controlled shutdown of Flex Revolution. Investors should be very cautious, as this points to a serious financial challenge that can no longer be hidden. The company seems to be prioritizing an orderly wind down over attempting to salvage the failing subsidiary. Alright, that is our breakdown of FlexShopper's latest filing. What is your take on these numbers and what they signal for the company? Future. Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.